So very quickly, I want to share with you my 4 best order block setups. So right away, this is going to improve your understanding about the market. So you will have better understanding about institutional price action, and definitely you'll be learning so much from this video as we're going to be touching the key concept that makes up the institutional price action. So how we bring all of that together to help us to find high probability order block setup. Now, I've done a video right here on this channel where I discussed about order blocks, okay? But in this video, we're going to be looking at other key institutional concepts that we bring together to help us find the best order blocks, okay? So if you're an order block trader or if you are an overall institutional price action trader, definitely you should be watching this. All right. So this is the legal disclaimer. You're gonna read through this. You can pause the video at this point and read through it, and that's fine. Okay. So once you're done, you click on play, and then we take it from there. We continue. So my 4 best order block setup. Now I've given you the definition of what an order block is in the previous video again, but let me just do it again once more here for the sake of those who've not gone through that video. So what is an order block? This is the price range that has evidence of institutional buying or selling. So that's the working definition of an order block. We can go further to say that it is often, now mark the word often, so it is not just limited to days, but it is often the last down or upwards candle before a strong movement of price in the opposite direction, preferably that movement of price, which is a strong movement of price, right? It has to have a fair value gap. And I will explain what that is as we go. And a break of market structure, a break in price structure. You should already know what a break in price structure is already. Okay. So, but that is the working definition, and we will explain this further when we begin to look at those different types of setup. But I did say that it is not just limited to the last down or upwards candle, and you're going to see what that means with one of the other block setup we look at, which is the hidden order block. Now, I've not talked about that yet in this channel, but I'm going to be talking about that right here in this video. So before we get to this, I want you to look at what we have here. This is a tip for finding the best order blocks, right? So one of the working tips that I focus on. This right here says the best order blocks are found within the 50 to 100% retracement level, Fibonacci retracement level. So we're trying to um, cater for um, you know times when the market is going to pull back. Okay, so when the market pulls back into a deep retracement, and we have another block that the market pulls back into, that is best, but we are using the 50 to 100% retracement level. So again, if you don't understand Fibonacci retracement level, or you don't understand how to use the Fibonacci, you can do a simple search right here on YouTube, and you will be able to find tons and tons of video that will lead you and guide you through how to use um, Fibonacci. Fibonacci can be found on your MT4 or your trading view platform. So here is the simple setup of the order block. So let me walk you through this. So what we have right here is that price moves down here. As it is moving down, basically what happens here is that the big institutions will be buying, right? The big institutions buys when price goes down. And after they after they've taken up the sell side liquidity in the market, what you're going to find is that price will begin to gap up. Okay, because now there's only buy side liquidity. So buy side liquidity exceeds the sell side liquidity, and so that's when you now have price move up. So buy side, there's more demand than supply. Let's just put it in a simple way. Okay, so the order block is mainly to capture that origin of that strong price move that indicates that a big buyer is active in the market. So when we see a big price move like this, we want to look for the origin of that price move. And when we see this leg, this price leg, we want to have a fair value gap. And again, when we start looking at setup, I will show you what the fair value gap is so that you get to understand it better. Okay, but the next thing that we like to see is a break in market structure, which we have here. Now, the significance of a break of market structure is this. We want to see that an opposing area of order flow is taken out. Okay, when that is taken out, that clears the road that when price comes in here, we can now target a higher price level, this point. Okay, so because that level has been taken out. So this is now the next area of order flow that is opposite to what we are expecting price to do. So this becomes the order block because this was the origin of all this price move. And if you pull your Fibonacci from this low to that high, okay, that's the tip we have right here. We want our order block to be situated around the 50 to 100% retracement level. So when price retraces into that area, we can consider that as a deep enough retracement for the sellers, because in this case, we're looking at a buy side order. So for the sellers to begin to weaken out, because in a bullish market, you should expect that the sellers would not be able to push price too low enough to take out the previous low that created the higher high. Okay, so we want to mark out the 50 to 100% retracement level and key levels within that level. In this case, we're looking at the order block that represents the level where we can expect to see price reverse from and continue a new trend. So this is why we like to find our order blocks inside here, inside the 50 to 100% retracement level. Okay, so once price gets in there, that is when we want to be a buyer. And our first target has to be this old high, but you don't have to wait for price to get to that old high for you to take profit. Okay, so you don't have to wait for that, but that's the first target, and then you can aim for higher price. Okay, but as price goes up, if you meet your 1 to 3 your 1 to 3 risk to reward ratio, then fine. You should take profit and walk up the market. Okay, so that is that. So let's look at the different setup right now. So the first one we want to look at right here is the inducement plus order block. Okay, so you already should be familiar already with what the order block is, but this is what it is basically. Let's just walk you through this market structure we have here. So we have this high, and this is the significant high we have here. This is the last high that set a lower low in this previous trend in the market. Last high that sets a lower low. And then we have a strong movement of price to the upside. Now, some of you who already used the concept of order block would say this low should be the order block. Well, you're right. This low is an order block. Here, where we have the last down close candle before the strong movement of price right here, that is supposed to be the order block, right? So you can mark that out and say you have another block right there. But if you look here also, we also have this other block. Why? Because from this point, we saw this strong movement of price. Look at that. This parabolic movement in price to the upside here, taking out the structure level in the process. Now, this is where we talk about as the fair value gap. The fair value gap, let me use this one right here to give an example. So if you look at the high of this candle, this one right here, this green candle to the left, okay? Now skip this one in the middle. Skip this one in the middle. Now look at this candle to the right, so right here. Okay, this is the low of this candle to the right, and this is the high of this candle to the left. Now look in between, you see that there's this candle in the middle. We have this body, okay, where we didn't see price weak from this candle closing this gap. So this space in between the high of this candle to the left and the low of this candle to the right is what we call the fair value gap. That is an indication of price, moving very fast in one direction, and an evidence that a big investor is in the market, okay, and they are willing to go a particular direction. All right, so we like to see the fair value gap right above our order block, okay, just like we have in this point right here. This is the last down close candle before this strong movement of price. And when you take a look, we have a fair value gap right in here, okay? From the high of this candle, skip this candle to the low of this candle, we can see a gap in between right there that breaks the high of the order block. So you mark that order block out. Now, that is your order block. This also could be an order block, okay? But price has to trade past this point before it gets to this level. If price was to trade past this order block, then this would be the next one you should be looking at. But we can see price did react from this one, right? But this is the order block and the inducement setup. So what is an inducement? An inducement is simply a liquidity point um, in the current price action. So it induces traders to do the wrong thing for the big traders to be able to get enough liquidity to go the opposite direction. So what we have right here is this. Here we saw the strong movement of price, which is indicating that the big traders are buying. Then we begin to see price drop down. So with each drop, what do you think the uninformed traders are doing? They're going to be selling, right? So we see a breakdown here. They're going to be selling, all right? So those who saw this and said, oh, price is going higher and higher. When price begin to form a low here, what do you think they'll be doing? They're going to be buying. Double bottom, one bottom, two bottom. They're going to be buying this. This is an inducement. All of this right here is an inducement. So people are buying, putting the stop loss here, and their stop loss is going to be, if they are buying, their stop loss is sell side liquidity, okay? And the market breaks down. Once it breaks this, oh, they say, oh, price is now going down. And so what they do, they begin to sell. So all of that is a sell side liquidity, and they're selling into a level where the big institutions are buying, which is right here, this order block, okay? And you, who is an informed trader, understanding about the order block, all you have to do is to wait for price to get back into this level. Okay, if it is on a higher time frame, then you want to use a lower time frame to confirm that this level is holding by waiting for a break in market structure on the lower time frame. But if it's a lower time frame already and you have done your higher time frame analysis that price is overall bullish, and then you see this playing out on the lower time frame, all you want to do is to take this entry. If it's happening maybe on 1 hour and you're comfortable with taking that entry, or the 5 minute or the 15 minute, that's all right. Okay. But anyways, you take your entry when price hits the top of the order block, and your stop loss wants to go where? Below the order block. So you can see what we did here. When we mark the high of the last down close candle, the low of the order block is the lowest point, the lowest swing point right there. Okay, so that becomes the low of the order block, not the low of the last down close candle. But if the last down close candle's low is the overall low right there, then that is all right. But if it is not, we take out the low. We take the low, the lowest point as the low of the order block. Okay. So if it's a bearish condition, then the opposite becomes the case. So the inducement plus the order block is one of the best for me. Okay, one of the very, very best order block setup. So it's the inducement, all right, that it's the odd enhancer in this case. Okay, so we have the order block. First of all, this is the simple order block. Price should just come in here and react. But then you have all this inducement, inducing price action here, inducing people to go the wrong way. That is, for me, an order enhancer because it is evident of the big institutions playing in this market. So the inducement plus the order block, that is our number one setup. And here is another example of that, the inducement and the order block. Here we have a break structure to the downside. If we look very closely, we have a fair value gap here. I've explained what that is already. Now we have the market making a swing high right here, another swing high. All of this is inducement. Think about that. This is inducement. And people are going to be what? Selling into that move. And then we see the price breaks through that high where the sellers, initial sellers here, are going to be placing the stop loss, right? Price breaks through that and dips into the order block. And then we roll over. So another order block setup that I like a lot, the simple order block plus equal high or low. Okay, so we're looking at a formal level of liquidity, but the type of liquidity pool that we're looking for would be the double top or double bottom. So, and they have to be equal high or equal low. Now, what do I mean by equal high? Equal high is when you have two tops formed, okay, and the liquidity resting above them are intact. So as you can see right here, we have that the right high lower than the left high, okay, which means that the liquidity that will be resting above here, so the sell side liquidity, you have sell traders right here, and they're going to be putting the stop loss above there, which is going to be buy side liquidity. That was not taken out with this price move here, okay, because it never went past this high. So we came down from here, and so there are going to be many traders right here will be selling, and stop loss will be around above there. So this is a significant high for traders who sold. They'll be placing their stop losses above there, which is going to be buy side liquidity, and people are going to have their eye right here as a key reference point to say that if price breaks through there, they should be buying. So they expect the price, once price break here, should continue higher. Okay, so it becomes a key level. So that equal high is a level of what? Buy side liquidity in the market. So this is where we use this to add more odds in our favor. Okay, when we take in the order block setup. So we have the equal high in view, and we have the order block, right, attacking. We have the order block right here set up, attacking that liquidity. All right, so like what we have right here. And we want to make sure we have structure also in our favor. So we have the equal high. This can play out on any time frame, guys. This can play out on any time frame, whether it's the daily, is the 4 hour, it's the 15 minute or the 5 minute. It can play out on any time frame, guys. And no matter what time frame it's playing out on, I am going for it. Okay, it doesn't mean it's going to work 100%, but these are high probability setups. So we have this low right here and this high. Then we have this lower low. When price moved above here, this high, we had the break in market structure for reversal. We had the retracement back into the breaker block. Talk about that later on in another video. And then we have price rise higher. This would have been an order block. Fine, it's a good order block setup we could have used. This also is a good order block we can use. If you put your feet from this high, from this low to that high, this should be around the 50% retracement level. If not the high of the candle, this red candle, it should be the body. All right, to fall inside the 50 to 100% retracement level. And if you pull your feet from this low, if you're using this swing, this low, if you're using this swing point, the low right here to the high, well, this is right inside the 50 to 100% retracement level. You don't even need a Fibonacci to draw a Fibonacci to see that. But we didn't see price return to this, but it created yet another order block. Okay, so this is where patience comes in. Once you understand your setup, it will be easier for you to be patient, guys. So we didn't see price come back to the lower order block, but then it continued higher, forming a new order block right here. Now this is it, right? So you have the order block attacking that area of liquidity, equal high, a relatively equal high. Here's an example of a relatively equal high also. This high didn't take out a high until this point right here. But then this one is the existing one before it was taken out right here. So we have the order block attacking what? That area. Okay. So this is what makes this a high probability order block. Okay, so very simple. The simple order block setup plus the equal high. So when you take your trade here, your stop loss goes below here, and you know that this becomes a draw on price. So you can be targeting the high right there, or you could take out profit here if you've met your target. Okay, But that becomes your best level for taking profit. So this is the simple order block plus the equal high slash low, which is my second best order block setup. Now in this best order block setup are in no order. These setups I'm giving you, they are in no particular order. All of them are great setups of high probability. So right here, this is another one, the protected level plus order block. The protected level plus order block. Okay, so what is the protected level, guys? The protected level is a very simple concept. When we talk about our market structure, that is how you get to understand the protected level. So we have a low right here, which is actually what? A liquidity point. This is sorry guys. So this is your relatively equal low. Okay, your relatively equal low right here, because this low didn't take out this low. So this is a liquidity point, a very good one at that. Market retraced back into that level and then rallied very strongly back to the upside, which is evident that the big traders are buying. So this is evident that the big traders are buying. So if they are buying here, understand that they wouldn't want to allow price to rise beyond, or they wouldn't allow price to fall below that point because they are buying there. This is what makes it the protected level. Okay, so we have a level of liquidity and we see price dip into that liquidity and a strong rally up, and price begins to continue to break higher and higher. So that makes that level a protected level. Okay, so if they're buying there, they wouldn't want price to fall below that point. So they would protect that level when price comes into that area. So you mark out the last down close candle before we see price move back up. Now, this is where I was telling you that, guys, it is not limited. The order block is not just limited to the last down close candle before the strong movement of price at the upside, or the last up close candle before the strong movement of price at the downside. No, it is not limited to that. The thing here is this, guys. When we're looking at the order block, we're trying to mark out the origin of the buying or the selling of the big traders. We're trying to mark out that origin, because that is what we are concerned with, right? So we want to buy where they're buying or sell where they're selling. All right. So we want to mark out that origin. So whatever that origin is, that is the zone we mark out. So you want to look at the candlesticks as price. Okay, these are all price actions. So whether you're looking at the bullish or the bearish candlestick, all of them is just price action. So if you look right here, if you were to mark out the order block, then you would have taken this low to this last down close candle we have here. Okay, but I want you to watch closely. We have this last candle here, this bullish candle right here. And when you go higher, you're going to see a fair value gap above it. So this fair value gap is all nested within the last down close candle. In this case, you're going to mark out this level, this candle, right? This last candle down here, not the last down close candle, but the bullish candle right here that is nested within the last down close candle we have. Now, we are concerned about the fair value gap. Remember, I said to you guys, the fair value gap is an indication. That is the indication that the big traders are buying or selling. That is what we are mostly concerned about. Okay, so we can see that the fair value gap actually opened right inside here. So we want to mark out this last candle right here, which is actually a bullish candle before the fair value gap did occur. That fair value gap and this candle is nested within this candle. That is why we want to take this one as the order block. So this is an example of the eating order block. Now I'm going to give you another example as we go, right? In the next slide. So, but look at what happened. Price comes into that level. So whether you take that for a more accurate entry or you're using the full order block, it's still the same. All right. So you take that and you use that for your entry. But you can see also that this also has the inducement concept inside the setup also. So you have an inducement here, an inducement here. So price made a low, it's a fake low. So people are going to see that. And those who are buying this little price move here, stop loss is going to be here. When it breaks down, people are going to be selling that and all of that stuff. So this is an inducement close to the order block. It's also a very good concept that adds odds, okay, to this particular order block we have here. So, but the key thing I wanted you, what I wanted to draw attention to is that this is a protected level, okay? So because it's a protected level, it adds odds to this particular order block. All right, so you can see the same concept is playing out here. We have this high to the left, this high to the left, relatively equal high. Price takes that out and break down seriously. Now that becomes a protected high. Okay, so you can look for the order block right there, which is actually this. We can see the imbalance we have here, which is the fair value gap rather. And then price trace back into that area and then drop off. Okay, so that protected level makes this a high probability order block setup. Okay, so let's go further, guys. Right, so this is the eating order block. There is nothing special with in this one. It's just like the simple order block, guys. But I'm just drawing your attention to it because it is what knowing, it is what understanding, right? Um, So you could see right here, we have the strong movement of price downwards. So where do we see the fair value gap? So we're always looking at a fair value gap, right? So we have a fair value gap here. Well, you could have marked from this low to the high, but you can see that's a very large range or large price range. If you mark this low, that's the last upward candle. You mark from this low to the high, that becomes a very large range. But fine, you could have gotten your entry. No problem with that. But this will be the best area of the order block. Why is it so? If you go to the lower time frame, which we're not going to do, but if you go to lower time frame, you will definitely see a candle. When you see this strong movement of this push to the upside before it drop down, this wick right here would be a bullish candle also. That is most likely on lower time frame. But you don't have to do that for you to know that this is the range that you should be using as your order block. Okay, so price begins to break down. Immediately the low of this candle was formed and the next candle opened. We can see how price went down significantly right here and left a fair value gap. Okay, now this candle is nested where? Within this one. So we can see the strong move started immediately this candle closed. This strong move that indicates that the big institutions are involved in the market at this point started immediately this particular candle closed, right? So that's where we take that to mark out the origin of the big move. And we can see how price comes back in to that area and drop off. Now, if you pay attention to the left, you can see that this is also a high, right? So we have a protected high. So right here, we took out this liquidity point here before we drop down. So this becomes a protected level. But we're not just looking at this, we're also looking at the formation of the order block. We want to see that fair value gap, evidence that the big institutions are selling, or if it's a bullish move, we want to see that fair value gap. That's an evidence that they're buying, right? And then we want to see the breaker structure. That's also very important for us because we want an opposing order flow point to be canceled out. Okay, now price reaches back into that level. Okay, that's when you want to be a seller or look for selling opportunities on the lower time frame in case you are seeing the setup on a higher time frame. And then we drop. Okay, so you can see price didn't quite take out the slow right here, but if you hang on, you might see price take out the slow. Okay, but you don't need to wait for price to take it out low before you take out your profit. If you make your calculations, you would see that, well, we are already I think by this point, you should have done a 1 to 3 risk to reward ratio if you did not refine the level on a smaller time frame. Because if you did refine the level on a smaller time frame, you definitely could have gotten maybe 1 to 5 easily, even before price reaches this point. Okay, so when the price is closing all this imbalance right here, you could have gotten your 1 to 3 to 1 to 5, or even much more than that if you refine the level on lower time frame. But if you didn't, then on this time frame alone, you could have gotten your 1 to 3, right? So that is it. So here's another setup. Just bring in this one so you can see what do we have here. The concept is very simple. We are adding the liquidity concept, the liquidity pool concept, to this one right here. So what you see, we have a low. First of all, we have the order block setup form. We have the last down close candle before the strong movement of price. Now watch what happened, guys. We have the last down close candle, and then we have the fair value gap. Look at the fair value gap right there. Okay, a high is broken, which is a break of structure. Price rises higher, comes down, but didn't quite get into the other block. So which makes this what? A liquidity pool. Does this again? A liquidity pool. A liquidity pool. So watch what is happening with these liquidity pools, guys, because this one right here is lower than this, while this one right here is lower than this. So the liquidity that will be resting below these lows will be what? Intact. All right. So once you see this, you want to be like the hunter, the skilled hunter. You are seeing the other block right here, a very clean other block, and you're not seeing all of this liquidity built up um, into price right here. And so what you want to do, this becomes your level where you'll be looking to take your entry. So price gets back into that level, and bang, you take that entry, right? That is how to find key order block, best order blocks using the liquidity pool concept, inducement concept, protected low, protected high, all of these things as an additional concept, all right, to improve your order block setups. All right. So if you look right here, you see another order block setup. Do you see it? Where we have a level right here, quick one, right? And a breaking structure right there. We have a high, which is what? An inducement. This is an inducement right here. Price goes higher than that into the last up close candle before this movement in price, breaking structure, fair value gap, or you can call it a big imbalance. That's an imbalance, right? So this price move here is just an inducement because it didn't get back to that point. And we can see how price sweep the high where we understand that liquidity would be resting and it traded back into that other block. So this is your inducement plus the other block setup we have right here. Okay. And then price will trace back down into this point before you can take this off. All right. So that's how you can add different concept to the other block setup. Right here again is another example. We have the other block liquidity. So liquidity is going to be resting above this high. Market traces back into that level and bang, strong drop in price. All right, so that's it, guys, on this one, guys. This is my other block setup that I've just given you, my best other block setup, guys. You can't have it any better than this. I've just shown you how you can add the liquidity um, pool concept, the inducement concept, or the protected low concept. And all of this can even happen or appear in one other block setup. Okay, so but this is how you can use all of this to make sense of what is going on in price and find out where the big institutions are buying or selling. All right, so if you like this video, guys, give me a thumbs up and share the video. And if you've not subscribed, you should do that for more videos, right? So that is it for this one, guys. I will see you guys in another video. Cheers and God bless you.